I'm the dumbest trader you will ever meet, and I still managed to make over $500 a day trading one 4-hour candlestick. Now, I don't always trade this simply. I used to be Picasso on the charts. I would draw random lines every single morning when I open my chart, one above this high, one below a line decision low, and then I would zoom out and I would confidently say, this is the institutional liquidity. This is exactly where the banks are. Meanwhile, they were probably looking at me like, what is this guy even talking about? I was trying to perform brain surgery inside of a blender with so many concepts and confirmations that even when I was right, I could not execute the trade properly. And that is the problem with traditional liquidity. It is supposedly everywhere. You can find one at the all-time highs, you can find another one at the session level liquidity, and then 20 others scattered across your chart. And then your job is to squint and find the one level price will choose out of an entire minefield. And when price finally does reach your level, sometimes hours, even days later, it fails it and takes your stop loss with it. And then you blame your psychology. I wasn't patient enough. I lacked the discipline. But the main problem was the system itself was so broken, it didn't even give your emotions a chance to ruin it. And that is why I spent over 10,000 hours studying liquidity and over 87,000 candlesticks, which I studied for the last 6 years of my wins, losses, and mistakes in my trading journey, just to land on one candlestick that only has 2 liquidity levels. This is what I call candlestick liquidity. Now, it's not a new concept that someone just invented. This is the exact market mechanic it has to go through to keep on moving. All we're doing every single morning is exploiting a hidden loophole the institutions have been using on the downside. And that simplicity leaves no room for guesswork or blaming psychology on an unclear system. That is why the greatest traders and investors all advised and preached the same thing. Keep it simple. Because while complexity can make you seem intelligent, simplicity makes you executable. And that's why most traders spend 5 years jumping from strategy to strategy, learning more confirmations and concepts, adding information into their trading catalog, and constantly starting over and over again. But I've already done the mistakes for you, and I'm giving you the entire framework in this video so you can cut out those years of just wasted collecting and smooth out that learning curve so you can reach your profitability in under a year. Now, with this framework alone, I'm maintaining 84% win rate. I've gotten trades just like this, and also went on to get consistent payouts month after month. Now, it does not matter whether you trade Forex, futures, or stocks, because all of those assets use candlesticks, and each candlestick has the liquidity that we need. And in this video, I'm going to show you exactly how you're going to be using candlestick liquidity and how the traditional liquidity is constantly confusing traders, where one gives you entry, bias, and target, while the other one gives you 20 pieces of hints and useless information. Now, I'm not going to hide behind some perfect hindsight examples. I'm going to go into the real market and trade this with you live with real money and real consequences. So at the end of this entire comprehensive listen, you will walk away with that knowledge, as well as seeing me either show you how simple candlestick liquidity is, or you're going to watch the dumbest successful trader try and prove it to you. Now, what's extremely important to understand is the differences between the traditionalized and general liquidity compared to the newer and more standard and efficient candlestick liquidity, which I will be showing you in today's video and seminar. So firstly, traditional liquidity, it's extremely random. You can find it anywhere on the chart. As I said already, it can be at a London session low, it can be at a random high low or a random high high. Whereas with candlestick liquidity, it is more defined. It is built around those 2 defined points, which is that candle range, high and low. The next thing is that the traditional liquidity, as you said, could be anywhere on your chart, whether that's at the highs or the lows, while the candlestick is only contained within that single candlestick. That randomness then forces you to guess and squint at which level price will choose out of an entire minefield of liquidity points, while with the candlestick liquidity, it reveals only one level. If price reaches the high first, you will then have a certain bias for that, or if price reaches the low, you then have a secondary bias for that one. And as you can see, the most important one that is trapping and inducing a lot of traders is that the timing is not guaranteed. The liquidity that you drew up from last week can only be either hit either the next following week or the next day or even sometimes later. You never know. But with this, it is within that defined time range window from 9:30 to 10:30, which is where I trade. And as I said, it can take hours or days to reach. While this one, it gives you that repeatable opportunity every single morning, so you don't FOMO and you do not revenge trade on D-tier setups. Another one is that it is subjective. One person could see another liquidity point, your mentor could see a different point, the trader next to you could see a different point. Whereas this one, it is most importantly defined by price. Price sets the tone of it. If I see that fall candle high, you're going to see the same fall candle high. Your mate in your community is going to see the same point, which is why people in my trading space, we all trade the same candlestick, which we usually have the same bias, right? So we can usually tweak it and tell us if there's anything missing. As I said, two traders can market completely different, while this one is defined by candlestick. This one can give you 20 possible targets, which can also be disalarming to traders, meaning depending on how you feel, if you're closer to passing a profit challenge, you might increase your TP just to get more, even if it's not a valid liquidity level. While this one, it is only based on those two sides of the range. You are either at it or you are not with it, okay? The traditional liquidity makes you chase price across the chart, while this one is a standard one framework setup. This one leaves room for interpretation, meaning there's more thinking, there's more steps, and there's more variables that could lose to you losing the trade. There's more variables that could lead you to guessing which level will be hit. The one candle liquidity gives you a defined entry and a defined invalidation and a defined target. This one makes every loss feel like a psychology problem, like you're the problem, you're not impatient, you're not patient enough. While this, it removes the guesswork and the setup is either valid or it is not. And then lastly, but most importantly, it keeps you searching for confirmation. You could have price sweep out one liquidity level, then sweep out another, then turtle swoop the next, then turtle swoop the next, and then make another roundabout to then sweep that level. And even with all that, you could then still take a losing trade. Well, this, it is mechanical. It's either price is going to give you a continuation, it either reversals, or there's no trade. That is why this is the most important system that you guys can use instead of looking for another liquidity video and trying to understand the SMC or ICT liquidity that is never going to give you that defined profitability. Now, let's get into some examples so you guys can actually see me break it down. Now, if you actually want to learn and watch me not only teach you how to trade this one candle system, but also trade it with you guys, you can actually, we're actually hosting a webinar and a full live workshop. We'll be going exactly how we use this one candle system and how it has generated me this amount over the consecutive years of me trading this and how you guys can do the same. Once again, we'll be going over the analytics, we'll be going over the exact trades, you'll learn more about me, as well as everything I do every single morning when trading this one move. So if you want access to this as well, that'll also be in the first link in the description. Okay, guys. So first link is application to this workshop. Okay, it's completely free. And then the second one is the link to the pamphlet that we're using in today's video. Okay, so let's immediately understand how this entire system actually works. Now, as I said, we're going to use the 4-hour candlestick to get our entire liquidity bias. Okay, so I first start on the 4-hour time frame over here. So I'm using S&P 500 for this example. And I really zoom in. Okay, I don't try and zoom out all the way to where I can see last week and the 2 prior weeks price action, because in reality, I'm only planning to be in the market in that trade for the next 15 to max 20 minutes. So trying to accommodate for all this price action that will then present for the next days and the next weeks is irrelevant to me. That's why I really zoom in straight into like at least the last 4 or 6 4-hour candles. And I really focus and hone in on those because that will give me my bias for the next 30 odd minutes. Now, once I have that, I then look at the candle anatomy. So I have a very specific workflow for all of my days and all of my setups, and I call it the decisive flow. And I call it the decisive flow all the way, explaining my bias all the way down to my entry. Now, if you guys actually want this full entire pamphlet, it is in the first link in the description, as well as a full masterclass explaining how it works and how you guys are going to use it. And that is in the first link in the description. But I'm just going to zoom in here and then really hone in on this side of the chart. Okay. So we are, let's do this. Okay. So yes, we are now focusing on the start. Okay. So we're assessing the candlestick behavior. Okay. And now I'm focusing on my recent 4-hour candle. So it will be this one. And I can notice that it is more indecisive, right? But I say it's indecisive because I can see that there is more wick on either side. Okay. I then look at the last 3 4 candles, and I can also notice something similar. Very small body candlesticks, more wick, and more wick. Okay. Another thing that I also notice is that they are shade. So it's a bullish candlestick followed by a bearish candlestick, and another bearish one followed by bullish, and another bullish one. So what that means to me is that price is consolidating, which is very good. We go up, we went down, and then we go up again, and then now we're kind of going down again. So all of this is leading me towards looking for a CRT, the candle range theory. I'm focusing on my 4-hour candle, 5 o'clock high and low. Now, if you guys don't have these exact times, make sure you're set to UTC -4, specifically New York time. Okay, that's what I use. And then as you can see out there, I'm using 5 o'clock, and my chart is Owanda. Okay, that should have you guys have something very similar to mine. So there is high time frame bias done. Okay, I understand what I'm doing. The tool I'm using is going to be CRT, meaning that I'm looking at price. I'm looking at 4 candle high and low, and my bias is based on that. I then go on to the second step, which is the lower time frame. So I'll go straight out to the 2-minute. I remember there's our 4 candle high and low for the 5 o'clock. And now my next question that I ask myself is the lower time frame ranging as well? So I'll leave that to you guys. But as you can see, just within this box, we do have a very tight range here, okay? And a very good way of knowing if it's ranging is just taking a line and drawing across the 50% of that area, okay? And as you can see, if we consistently touching this line, that means we range, okay? You can see here, we touch it once, we nearly touch it here, we touch it again, then we touch it again, we go above it, then we touch it one more time, then we touch it here again, okay? So at least 5 touches. The reason why this is important is because if price was impulsing, which is another model that we use, if price was impulsing, it will just maybe went past the line once, maybe twice, and then continued in that one direction, okay? But as you can see, in our example, we draw that line and price is consistently going above and below it. That is what is creating that range-like structure. So now that you guys understand that, we are now understand that, yes, we are going to maintain the CRT bias. And then we ask ourselves the next question, is a super tight range? If yes, which this one currently is, we are trading our bias simply based off that high and low, okay? So we forget about if the high time frame is bullish or bearish. We're solely focusing on this high and low. So how it works is, if price sweeps this 4 candle low, which is our candlestick logic liquidity, we will then look to buy up. If price sweeps the 4 candlestick high liquidity, that will lead us to having a bearish bias, okay, to then target the opposing side. Very simple. I'm not confusing myself with the inner trend line. I'm not confusing myself with any equal lows. I'm not confusing myself with London session lows or prior all-time lows or highs. I'm just focusing on these 2 lines, okay? That is all I'm focusing on. So now that we have that, okay, we understand what we are doing, okay? As you can see, everything, it follows a routine checklist. It's followed down with a decisive flow, meaning that it is repeatable, meaning we can do this every single day, okay? I'm not coming on here and throwing every concept that I learned for the last 5 years and I'm throwing onto the chart, hoping that it sticks or lands. I'm following something that is decisive and uses a set rule basis, okay? So once again, this is in the link in the description as well as the full entire masterclass. I'm explaining it. Okay. Now we're gonna wait for price to either sweep the high or low. Okay, boom. So in this case, we swept the low first. Thus, what bias do we have? It is bullish. Okay. Now this is very important to understand. This happened at 9:30, so just before 9:30 here. Okay, 9:40. That's when we actually sweep this low, which is around market open. Now what I'm waiting for is a change state, which we do get over here. Okay. So why do I consider this a change in state of delivery? Simply because we're going to do this again. It's very simple, guys. Just all the candlesticks are all you need. Okay, the candlesticks are all you need. So let's understand this one by one. We have bearish candlesticks here, so by nature we understand we're all going down at this point. Okay, and then we have a bullish candlestick, meaning price went higher. Okay, because that bullish candlestick. We then followed by more bearish candlesticks, meaning we are just going lower. Okay, without a doubt. Okay, and then now we then have another. Here's the most important one. We have another bullish candlestick, which meant we went high. Even though it's a wick, it's still a bullish candlestick, meaning there was bullish price action. Followed by a bearish one, we went lower, and then followed by another bullish candlestick, which closed above. It should look very similar to this, right, guys? Now, if you don't believe me, I'll also go down to the 15-second, just to show you guys more clearly. Not 15-minute, 15-second. Okay. And as you guys can see, now it is a lot more clearer. There is the lower high, okay, the lower low, and then price breaking and closing above that. Very clear, plain and simple. That is all we're doing, okay? We're not overcomplicating it. We're not overcomplicating our entry. Why? Because the high time frame, the one candlestick already gave us the tools that will give us our direction, okay? Our entry is just getting us in that position, okay? Just getting us in the movement that we see is going to happen in the near future. So there's no need to overcomplicate this with SMTs, with order blocks, with IFVGs, with all these different new concepts. Okay, yes, they could help, but in manufacturing, right, it's not yielding us a greater efficiency. Okay. So I'm gonna go back to the 2 minutes here. Now that you guys understand, and I'm gonna go ahead and enter the trade right here. Okay, guys. So here we enter our trade, and then where's our stop loss being placed? Just below that low, exactly. Okay, why are we safe below this low point? Because this already took out major liquidity. And then where do we target? The opposing side of that range. Okay, as you guys can see, it's clearly defined of what we're doing. And the reason why I have so much confidence in this is because, remember, I'm not trying to trade the next few hours or the next few days of price action. I'm focused solely on this boundary, okay? Right, this is the same boundary I've traded for the last 6 years, where I've tested and studied 87,000 candlesticks that move the exact way as this for 10,000 hours of liquidity training. It's all built around these two lines. This is my boundary, okay? This is what I've mastered. This is where I'm most comfortable. And that's the thing with a lot of traders, they try to master the entire market, or for them to lose the money to the entire market. But are you focusing on this very specific period, a very specific gap, a very specific loophole in the market, and exploit it continuously? That is when you'll then see profitability. That is when you'll then see yourself succeeding, because it's something you used to, you see it every day, and you can expect the same thing from it every single day. Okay? I'm not trading one day at 8 o'clock and another day at 2 p.m. No. I'm trading 9:30 to max 10:30. Okay? Looking within this bias. So, as you guys see, very simple, 2 lines, and there's not a lot going on my screen. Okay? As you guys can see, this is what I want you guys to be doing, okay? Not trying to be, as I said, Picasso with drawing all these different lines, all these different rectangles that price could bounce over. I'm not even worried about this bearish order block here, okay? Because I don't care about it. I don't accommodate for it, okay? So enter my trade here, and then from this point, you away, okay? Right? You're away from the chart. You're going out for lunch. You're spending time with your family. You're spending time either working away from your 9 to 5, either working on that business that is taking a lot of time from you, or simply, as I said, you're just spending time with your family, okay? And then you get triggered when price finally does, which is your TP. As you can see, what happens with our far candle? It went from bearish stick, okay? Let's just go back here, you guys, so I can actually see this forming out here. Okay, went from being bearish, okay, manipulating all the other traders, okay, getting them in on the sell-off, inducing them, right? So all this inducement, all this fancy liquidity terms, it all happens within this one candle, okay, right? So traders get manipulated, they get induced into bearishness, they start trying to sell, they start trying to get on this total soup. What are we doing? We're just eating up their stop losses, okay? And slowly but surely, price, look, as you can see there, it is now liquidating all of them. That is where that wick comes from, okay? And then we are out of our trade, okay? Plain and simple. And if we now go back to for our time frame, look at that. One 4 candle gave us our entry, our bias, and our TP. One candle can change the rest of your life. One candle can book your trips. One candle can retire your family. One candle can set you up. Okay. But there you go. Now we're going to go into some live trade examples. I'm done showing you guys this. You guys can just see this now from how we actually trade. There is another model that we use, okay, which is CIT. You will see us using that as well. But once again, if you want full access to that and understanding it, just click the link in the description and then you guys should understand. And I also will link the 4 candle video, the free course, which you guys can also watch. But just so you guys have a bit of context, so you're not too confused when you do see it, CIT is still using that same 4 candle range. Okay, as you can see, there's my 4 candle high low. And all we're doing now is when price is actually impulsing and going one direction. Okay, now you can see we no more actually really doing that consolidation. Instead, as you can see right there, we crossed this line mainly once just before market open, and then we crossed it again. Okay, and that's when we reach the 50% on the range, which is falling within our CIT levels. Okay, there we go. Yeah, 50%. Once you have that, using a simple turtle swoop, like so, and then entering as soon as price gives you a change state, like right over here. Okay, and then we do just target intraday lows to wherever you want to target. Okay, pretty simple model as well, not as complicated, okay, as anything else you guys should have traded. Still 1, 2 lines, 3 lines max that you should be having on your screen. Okay, but I'll further explain this with the live trades that I'll be taking. Okay, we're getting to this one a bit late, but same thing, 4 candle high liquidity swept. This was the first at 9.3, and then this is a double sweep because now we took out the lows. The 4 candle was to go higher and then target this intermediate high over here. So let's see how price moves here, and we can get a good move here. Just going for this lower static one to this high. Yeah, a bit late, very late actually entry, but let's see how price treats it. The bit of good momentum here. So hopefully we do reach this. I'm gonna have to actually go get some lunch, so I can't really monitor this move all the way. So yeah. Okay, so recap. We finally did end up hitting. Okay, so in the day, price ends up going all the way to our direction, going taking out that high. Still the same liquidity that we used. And as you can see, one single candlestick for our high and for our low gave us all the liquidity we needed for this day. No guessing, no random trades. Okay, so it is Monday morning, getting a very strong push on the fall candle. Just to recap here, the recap is fall candle high, fall candle low. The fall candle is bearish. I mean, it's bullish, but getting a very strong push here. Stronger than I'd actually like, because I did want to see a CRT. So I'm not too sure now. I guess I just have to kind of wait for a total super of some sort, and then re-enter, and then I guess we'll just target higher. But yeah, we want to get the sweepy on the lows. We haven't gotten that yet, but it's still early. It's 9:38, so we're gonna wait it out here and see when price confirms and condenses itself to our bias. I'm pro bullish, so I'll see how price lets us into this trade here. It's gonna be very interesting. Okay, so now we have a sweep on ES. So you can actually close below a candle low though. That's the important part. Like in the MES, just close below this candle low here. Bang.
Order filled.
Pretty happy with that. Pretty happy with that. Let's close this thing. Okay. Just like that. Okay, let's see. Let's see how this one plays out. First main CRT position of the day. Okay, let's see how this one goes. Start on the Monday. Yes. Normal super the high. Going towards those lows. Okay, good momentum coming in now. Okay, definitely looking solid now. One thing I realized, you cannot be mad at how price moves just because I took a sell and I'm on the bearish side. It's in my favor, but doesn't mean I should be delighted. Because if I took a buy and I saw that same move to the downside, I'm going to my stop loss, and then I'll start to hate price action. But when you disassociate your own being from price and become independent of it, because it is independent of you, it will move regardless if you in there or not. It really brings down the stress the unneeded stress we put on ourselves as traders to wanna feel that we're right or that it's working out because price is in our favor this time. But yeah, price could completely just reverse on me completely right now, and then it'd be a whole different story. But it doesn't change the matter of the fact that I still executed on what I was supposed to execute on. And that's the only brownie points I give myself based on that. But let's see. Okay. But this is all based off of one candle. So let us see. We just reached the 50%, so still watching out. We might still see a bit of bouncing up and down here, but I'm really a fan of this sweep of this high candle. Sweep of this high. I want to see that exposure to those lows now as well. But yeah, still the only liquidity you need. Far kind of high, far kind of low. Don't overcomplicate it too much. I don't have 15 different 100 lines going on here. I don't have 15 different boxes for FEG or higher time frame balance, order block. I'm just focusing on that two lines, the high and the low. Whichever one price takes out first, I trade this off for that. I don't know how much further you can remove the guesswork or emotion out of it. And yeah, just wait for TP. Okay, we're nearly on the TP on the other account. We just up around $1,000 here. Yeah, yeah, no, just around 1,000 USD on this account. Nearing the TP. Rejecting off that candle opening for the 5 a.m. candlestick. Okay, looks like we're nearly hitting the TP. I think the main account also just hit TP right now. Yeah, okay. Let's check the $50 account as well. Hmm. Okay, we're nearly reaching TP here. Oh, we already hit TP. Okay, perfect. Clean little. Okay, but we just hit TP there. Hit TP on the futures one. And this one, we're nearly there. And then, yeah, there you go. One candle. Just literally edging us there. Okay. Super close to TP here. It's really taking its time now. Okay, yeah. But up 1500 on the other account as well. But still super slow. Very low. But I'm willing to risk a lot on this one since the start of the week. Yeah. Just you guys can see it there. Yeah, about 1500 there. But at the CP, so we'll see how it plays out for us here. Okay, now price is just dancing around TP now. Literally. Nasdaq's moving super slow as well, but it's good that it shows S&P today. Kind of knew that S&P would actually have better moves than NAS, at least because its range is a bit tighter. But there you go. Yep, and that is our TP using one candle, one candlestick liquidity for the 4 hour time frame. Okay, it is 1 minute before market open. Let's see what I have here today. I'm looking more for ACIT. Okay, but still using the 4 hour candle as my main range here. Take a look at this. We are right about the just still within the premature. I want to see a very basic liquidity sweep here, which be based on price taking out this high low here. I mean this low high. And that is about it. So this getting swept will be valid causation for me to wanna short lower. Same thing with ES here. They look practically the same. Both are following some price action. Both are impulsing very strongly. Yesterday we did have that 4 hour candle that led us to a very strong bearish bias here. I think we're really speaking about this. But I did end up taking a very late entry or somewhere around these highs. Just before market close, and then price pretty much just dumped well accordingly to our favor. So now is the next day, and we're just gonna see how price moves today. Let's see, let's see. Yeah, following CIT. I'll just wait and be patient. Okay, looks like we're actually getting our total soup on ES first. Let's see, this might be signs for an SMT. Okay. Okay, and I'm just looking forward to actually start going bearish now, and then be good for a move downward. So here's one thing they have to be very careful of. Prices presenting good looking bullishness, but using the decisive move pamphlet, which is considerably more CIT and a bullish higher time frame. I mean, I'm a bearish higher time frame, so I want to at least follow that bias. Even though this looks good on low time frame, it's still the first 3 candles of the session. You guys can get this in the link in the description, but as you guys can see, our far candle today is impulsive. That's looking towards CIT, while the trend bearish that's taking shorts for the CIT. And the stop loss will be above our total soup high. Okay, we're looking at closing in the 25 to 50% right now. That's still CIT validation. And then, okay, now, yeah, these are main things for CIT. Yeah, so in accordance to this, are we within the range on? Yes, we just tapping that 25% check. We're not. We're not. The tail soup, the SMT is not there anymore, but we're still tail soup, so we can take either one or. One candle one session, one trade, and one decision. That's what we're focusing on right now. Let's be very careful, yeah. You could be going bullish, but we're still following execution of the plan to go bearish. Yeah. So we're still within the optimum zone now, so that's why I'm still looking at this. But even though price is bullish right now, I'm still looking for that bearishness to go lower here. Yeah, ES is looking a bit more convincing now. wanting the candlestick to close bearish as well. Yes, okay, that's good. It's not actually closing below it though. I'll use that as my entry. It's looking good now. Nearly, nearly. Yeah, we're in there. Okay, that's where we're in.
Order filled. Order filled. Order filled.
Okay, now we're getting our TPs. Okay, let's see. We are now in. But again, let's sell off now. So we're doing something like this here. Something like that actually would be better. Mm. Let's see. Okay, starting to reverse a bit more there. That's a good rejection one I actually see. Let's see. Okay, I think I can just leave it now to do its thing. Had a strong low rejection, but price is now dumping. Depending on the volatility that does come in, I might hold this a bit longer. Let's just see. Kind of just indecisive right now. Going between bullish and bearish. Pretty slow here. Okay, so we just got a TP here on Nasdaq here, and we are seeing that, if I'm not lying, this also can close it and pretty much hit the profit target. So yeah, so that's full profit target for this one. Yeah, still watching the futures. This I'm letting it go for a bit longer. I think it's a bit more going to 1.7 with this one. So let's see how this one plays out rest of the day. Okay, so I'm on the students here, but I'll just show you. This is the other futures account that I'm also just trying to build up right now. Yeah, okay, you should be able to see the current trade. Yeah, so you can see right there, my profit target is 1400. You see that? Because this is a 50k, and I don't want to breach that 1500 rule, because then I pretty much hit the consistency target for the day, and then that's me, my account is breached for that day. You see that?
Yeah.
So also still the same CIT, just going around that 1.7, right? And then this way, take my money, then no one's complaining. But if I were to push this even a tad further, then it's like going to that gray area where it could be a bit dangerous now. You see?
Yeah, I see.
Okay. But yeah, I actually that was got to the full profit target, right? So it's like they it's things it's all business, it's all a scheme as well. So you just have to also know how you're gonna work around it. You see, Bennett?
Yeah.
Because yeah, this one I got out earlier, and then we end up um, reaching the target faster, even though it was 10%. But as you told me, right? As you told me, your phase ones, you're chilling with that, right? You pretty much pass phase ones easily. So I'm still taking to
Yeah.
that all you need to do now is kind of find like a one step instead. Okay.
Yeah, I think that's the one I'll try next, the one step. And then see how I manage from there. I've even passed the second phase, but I breached the rules and they refused to pay out due to my lot sizing.
Um.
Um, I used too much lot size for that account. But at the time, I was taking a futures trade, but like I said, I didn't understand futures at the time, and
So it
the
was
lot
it a
sizing.
what type of account was it? A normal futures account, or was it like a normal like?
It was Alpha. It was Alpha Capital.
Okay.
It was Alpha Capital. So it was a normal forex and everything else with
Mm-hmm.
futures as well.
Oh, so everything was kind of combined.
Yeah, it was combined, and I passed it. But I took a trade with futures, but I think I used too much lot size, and they said I breached it and refused my payout.
You guys have to be careful with that, honestly, because it's always the risk management that's the most important part. That's why you have to be very critique with those rules. Even this, just getting below that 50% target as well, right? But a good thing with futures is just contract sizes. So I don't think there should be too much of a lot size problem. The only thing is that on some of the futures account that you have a max contract that you can use, right? So for example, this one, the max contract size you can use is 5 minis. right? That's the only thing that could be breached on this end. But I really haven't heard of a lot
Order
size.
filled.
I haven't heard of like a lot size, a lot size rule in specific though. That's why I'm so confused.
Yeah, similar to what he just said. That I think the maximum lot size was 5 for
Cool.
that account futures, and I think I used 6. But like I said, now I know this time to do it reviews by the percentage of my account balance,
Yeah,
so I won't make the same mistake next time.
yeah. As long as you're learning that part, then fire, well done. Keep it up then. Surely gonna at least I think you should be able to pass one now easily.
Yeah, next one I go for, I'll let you know.
Okay, perfect. Um, let's see. Any other questions before we wrap up this session?
There was one that I had, but it was to do with one of the videos that Novo.
Okay, just wrapped up the lesson with students, but as you guys can see, now still using the same one candle liquidity level, we passed this 10k, 10% done using the CIT model total soup. So now you guys have learned using the far candle high and low liquidity, as well as using the CIT liquidity with the en route of total soup. Literally one line, okay, not 15 different other ones. It's one line mainly using your chain of delivery entry and then TP. And also on the futures, this other account, we're still doing quite well on this one. We're laying it right up a bit more, but yeah, this is, where is it today? Yeah, we had a rough day yesterday, but made a good amount over here. So every week that's why it's been profitable. This is the one where we kind of tilted, which is okay, but then we definitely made it up next week. Okay, there you go. Yeah, order filled, order filled.